Good morning, everyone. All right, I'm going to start off with the NASDAQ futures here today. And not that anyone doesn't know it already, but prices are a little extended. And I thought just showing the prior moves and just putting it in perspective, because none of us want to get caught in a downdraft. And that's exactly what's happened the last two times, a big sharp move to the downside. And while prices recovered eventually, it's not pleasant to get caught in such a thing like that. And we have to recognize when the possibility is increasing that there could be such a pullback. The markets are up here this morning. There's nothing to suggest, strongly to suggest, that they're going to pull back. But, looking at this chart here of the prior moves, we look at what's happened historically and put that in perspective of what's happening currently and say, you know what, we're closer to an event or a correction based on the past, than a large move continuation to the upside. And so what we see is that, here's the prior move from this prior low, about 7%, 376 points. And here's the V bottom, what I would call basically like a miracle recovery after a wide range bar to the downside like that. And a rally right back up again. And that was just about 6%, 331 points. And then I would say a normal type of correction. Wide range bar down, an attempt to hold a 50 MA, back up to where prices broke down from, another correction back down, and then the rally started, and we're up, it's about 6.33% here, 354 points. So just based on that, it would suggest that we're closer to some type of a pullback in the markets. Now, at a minimum, we have to see that prices would break below a prior day's low to even consider, that's happening. You could have a blow-off move to the upside. It's possible. So what we do is just, I'm just going to drag this up, and we just keep, and this is the current day right now because it's the futures, 24-hour chart. Prices would have to break below the low of yesterday's bar to even begin to, think that, okay, maybe we want to short even from an intraday point of view. From a swing point of view, maybe we usually let the initial crack happen and then look for an entry point from a swing point of view on the daily chart. Now, here's our price analysis to suggest how we're closer to that pullback. What I like to have is some confirmation from market internals, and we have that right now. I'm going to show you another chart. So here is the QQQ, the ETF for the NASDAQ 100. And what we have here, they're up here a little bit as well, and we have the potential for a breakout bar failure here, meaning here's a little consolidation. Here's the breakout of it. Here's an inside bar, and prices would have to trade below the low of the inside bar to confirm the breakout bar failure. And then we look for some kind of a move to the downside. So putting in perspective those prior moves that I showed you and what's happened here, and now at the bottom here we have a sentiment internal that shows what option traders are doing. How many puts, bearish bets are they buying versus bullish bets, calls, and vice versa. So what we have right now, and this is a 5 MA of that put call ratio, and this is just the day-to-day closes. Pretty simple. And what we see is, as a couple of days ago, they aggressively were getting long and the close, and now our moving average that I use for an intermediate term timing is down here below the bearish line, deep into it. And here's what happened the last time, and here we got just into it, and here's the last time. So when option traders start to aggressively believe in the upside, buying an extreme amount of calls versus puts, bearish bets, the market is closer to some type of a pullback. So we just keep that in mind. If you're long, whatever it might be, it's a good time to be selling calls a covered call position against those longer term holdings. You put that money in your pocket. It lowers your cost on that stock that you're holding. And if you, of course, you cap your upside if it does continue to go up. But if it starts moving down, you've lowered your cost and you still hold on to it. It's in an uptrend, and just the fact prices are in an uptrend, we look to buy pullbacks within uptrends. Right? This isn't to say that any of this isn't to say that some huge correction is at hand and we should exit the markets completely. That's not what I'm saying. I'm saying is that we're closer to a short-term correction than a continuation to the upside here. So let's protect ourselves, trade accordingly, be less aggressive on the long side, so on and so forth. All right. So just to keep this video a little shorter, you can see the S&Ps are on up. They look great, uptrend, so on and so forth. Based on what I've already said, we know that risk is increasing and things always look great just before they don't, right? The Dow futures look good. I love this little consolidation and the pullback. It's not extended from the 20. Everything looks good. So let's see if it keeps going or not. We know what's happening as far as risk goes. Gold pulling back a little bit, pretty whippy here. Just overall not interested myself. And oil had a great day yesterday. But these kind of patterns where they're bottoming, trying to bottom, they're erratic, and you can get caught in a lot of whipsaws with this type of a pattern. So versus more, you can see intraday. This is nice. Right? So all these type of patterns are applicable to all time frames, but it's not always that you're going to get the alignment of multiple time frames where the patterns are matching. So and what an intraday trader can be doing aggressively with great patterns isn't necessarily going to be the case setting up on a higher time frame, and of course vice versa as well. All right, guys, I'm going to leave it at that, and good trading, and we'll talk tomorrow.